What's going on, guys? Quick video on how I'm reading the pre-market here for the NASDAQ futures. So each and every single day, I'm going to start off by looking at the 1 hour time frame. Very, very simple. Again, I'm going to start off using my big chart. Now this chart has every single moving average from the 5 down to the 200, as well as Bollinger Bands, as well as linear regression channel 50 that can only be implemented the way I have it on Thinkorswim. So what I start off doing is looking at where did we, kind of test in the overnight session, right? Pre-market, overnight, same thing. What I'm noticing here is at 2 a.m. Pacific Standard Time, we came down, we had a low price of 18,107. Great. So I'm going to mentally mark this level out. I'm also going to look at the high price here. I'm going to look at where we kind of opened up, high price being 18,190. We kind of went up to 18,182. So this whole area here is an area of interest as well. Let me kind of put a line on the chart. That's an area of interest. That's the pre-market highs. This is the pre-market lows. Great. The next thing I tell myself is, okay, if we're trading with inside this range, our macro move, meaning our big move, can come when we get outside the range, right? Outside the range. Everything else in between the range doesn't mean that there's no trades that can be taken, but they need to be thought of more so as scalps. So for example, if we don't take out the lows, or let's say we quickly sweep the lows and then we start bouncing back, maybe you can identify something on a 5-minute time frame, 20 SMA play or something that has a little bit of space. But I'm thinking I need to get in, get green, and get the hell out, just due to the fact that this can go against me at any point in time because we're trading with inside of a range. Anytime you're with inside of a range, there's really nothing going on other than just scalps back and forth. It's just price trying to figure out the direction. So there was a couple things that you could do going into the market open. Obviously, this 1 hour candle here is going to start at 6 a.m. So it's going to include a little bit of pre-market action, as well as 30 minutes off the New York Open, the first hour candle here. So what you can do is tell yourself this: if we take out the overnight session highs or lows, the pre-market highs or lows, I can take this short position, right? You see it here. I can take this short position for one of two ways: a scalp, meaning that you're going to size a little bit heavier, maybe multiple micro contracts or one or two mini contracts. As soon as we break price, that pre-market low, you get in, you allow the P&L to get green, and you get out. If you get in and it quickly snaps against you, you need to make a very, very split decision on whether you're going to hold this trade or just get out. Personally, for me, if I get into these type of plays and as soon as, the first 10 seconds, 20 seconds doesn't go in my favor, I'm just going to cut the trade. Why? Because I don't have, the level of drawdown that I need, especially on a prop firm, and especially trading multiple mini contracts to sit here and allow this thing to take 15, 20 minutes for it to develop. I go down 15, 20, 30 points on this in a matter of minutes, it's going to auto liquidate my account and I'm going to lose an account. So again, if you're thinking scalp, because again, some people like to scalp, some people don't like to scalp, but if you are a scalper and you take the first move, meaning what is the first move? The first move means as soon as we break the pre-market lows, you're jumping in, you're getting green, you're getting out. If you're doing that, make sure that you're sized appropriately, something that you can handle, and you're okay with, taking 5 points on 3 mini contracts and then watching price drop 100+ points. Not telling yourself, well, I'm going to jump in again and again and again and again and again. The more you do that, the more probabilities you have of getting caught in a little bit of a bounce there. Now, the second way you can do it is to allow the first hour candle to close, right? Notice how we lost the 200-day moving average down here. Let the first hour candle close, meaning if you're trading Eastern Standard Time, 10 a.m., you're not even looking for a trade until 10 a.m. Now, what are you looking for? A confirmation over pre-market highs or a confirmation below the opening range candle, which is the first hour candle. That would be here for me at 7 a.m. This is a big trade time for me, that 7 to 8 a.m. Time. I'm always looking to see what confirms the opening hour lows. I'm going to take that same thing. Again, if I'm going to treat it as a scalp, I'm going to get in, get green, get out. If I'm treating it as a little bit of a longer trade because maybe I'm playing 2, 3, 4 micro contracts, I will allow the trade to work a little bit more in my favor. Again, I'll use the 5-minute time frame to kind of manage that trade by either using the 20 SMA as a stop or using the previous 5-minute candle as a stop. so forth and so forth. But even on this particular candle here, the range was 121 points, and it goes down over 175 points within the next hour. So you can see here that you would have even made a one-to-one at least 100 points on this particular move. Now, am I saying that every day you take a trade like this, you're going to make 100 points? Of course not. Today, the market was down, 350 at one point in time. This is one of those anomaly days, right? Where the market is just screaming in one direction, hundreds of points. You don't get that each and every single day. Most times the market, ranges between 50 and 100 points per hour candle, but you're actually getting, or 30 to 50 points per hour candle, and you're getting moves that are averaging, in this particular candle, 121 points, 174 points. And in the last couple of hour candles are only about 50 points. But I'm just saying, the question needs to be asked. Are you looking for a scalp? Then mark out the pre-market highs and lows, previous day highs and lows, take those moves, whether you're going to let it confirm, meaning break the pre-market lows and then confirm that new low price. There's your entry using a previous 5-minute candle as a stop. Or you're going to size up a little bit heavier. As soon as we break those pre-market lows or highs, you're getting in, you're letting the P&L run green, and you're just quickly selling out. So for some of you newer traders who are joined in this room, and you guys kind of see people posting gains within the first 5 minutes, or even in pre-market, or, in 1 minute off the bell, that's what they're doing. They're identifying these levels. They're finding, their position size that they want to enter in. They're getting in. They're getting green. They're shutting the computer screen down. They're coming back tomorrow. They're getting in. They're getting green. They're getting out. Does that mean every day you can do that? No. Sometimes you get caught on the wrong side. I've been caught on the wrong side many of times. Again, that's trading. Nothing's going to be perfect. If you allow it to break, put in a new low. For example, today, since we're moving lower, if you allow the pre-market lows to get broken, put in a new low on the 5-minute time frame, and then waiting for a following candle to confirm the new low. Generally speaking, I like to use either the 20 SMA if we close above it as my stop loss, or I use the previous 5-minute candle next to my entry as the stop loss, and I'm trying to target that previous 5-minute candle range as my take profit. So if for example, I'll show you here on a 5-minute time frame, we can see what that exactly looks like. So for example, if we break that price here, I would be using entry price here at around 635. I can use a 30-point stop loss. If we wait for the first 30 minutes to pass, you can see here, we take out those first 30-minute, which is the hour candle lows. I would be taking this candlestick short, and I would be using this as a stop. So my stop loss would be somewhere around 45 points. So again, if you're trading mini contracts and this snaps against you 10, 15, 20 points, you're going to be put in significant drawdown. You're going to be very, very panicked. You're going to run the risk of losing an account. I recommend when the ranges are this big to trade micros, 2, 3, 4 micros at a time, even risking 45 points. You're looking to lose $90 a contract. If you trade 3 contracts, it's a $300 loss if you lose. However, if you win, you're going to make around $300. And with that $300, you can close the computer screen down, come back tomorrow. Hope this helps give an idea of how I'm reading the markets. Sometimes in the pre-market, you guys may see me saying below this price and whatever, blah, 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 blah. Like, for example, if I was looking in the pre-market, right, I'm looking at the overnight session lows here, and then I'm looking at what was going on leading into the market open. I can take these lows off the bell, and I can target this pre-market low, which is that, right? So again, is this a lot of room? No, but it's, at least if I move this to the side here so I can see, you're making, from 18,119 area down to the overnight session lows, pre-market lows, down to the 18,100 area. This is 20 points. So for some people, taking a trade like this and making 20 points is good enough. You take one mini contract and you make 20 points, you're doing very, very well for yourself. You're even trading, let's say 2 or 3 micros and you take 20 points. You're looking to make 40, you're looking to make 80, 120, $150 in extremely quick fashion, 5 minutes. So for a lot of people, that is more comfortable. If you're looking for the bigger move, because everyone's always looking to make $1 million on a single trade, you can definitely hold it. Definitely hold your play, but your stop loss needs to be above that candle, right? Or excuse me, wrong candle. It needs to be above this candle. So you're stopped out over, right? Over this candle. Hope you guys can see that. And you're just letting this trade ride and taking profits on the way down, where you're taking profits at least 1-to-1. If you're going to risk 40 points, at least get 40 points, right? Or close to it, right? 30 points, 35 points, 32 points. Just be smart about it. Again, any green is good green as long as you can control yourself and stop on the day and not try to over trade. Hope this helps you guys make a little bit more money off the open. And again, I'll see you guys all in the room. If you have any questions, just, be sure to ask.